Ladies and gentlemen, open banking pioneers, thank you for joining us and a very warm welcome to our campfire to discuss the hottest topic in the industry, variable recurring payments, VRPs. Now, today, the conversation around our campfire is the future of payments, VRP and beyond. Maybe I should have asked our production team to cue us a fanfare, as I believe this is a real moment to mark. It's finally here. It's been more than a year since the CMA clarified the mandated status for variable recurring payments, a decision which in itself followed months of consultation. Now, they're here and they're working, and without a doubt, this is the largest single step forward for open banking since the first payment APIs were launched, and will undoubtedly play a huge role in elevating open banking payments so that they offer a genuine competition for direct debits and the card rails. But there is still so much to discuss. To sweep or not to sweep, safety and fraud, commercial structures, particularly around premium APIs, and much more. VRPs are widely regarded as a game changer. You will always get VRPs and game changer sort of in the same sentence. It's not just the wider service offering, it's the drive towards a more equitable business model around the risk and the liability, which in turn, I believe, drives improved consumer protection. So for VRPs to really, truly deliver on the opportunity they present to the industry, we all need to move together collectively and to collaborate. And I believe that moment is now to generate the market momentum. I was saying this just before we came on air. It's only fitting to share that at the 11FS Awards last night, which I have to say was probably one of the coolest tickets in town, OBIE, implementation entity, won an award for VRP. So a huge congratulations to Charlotte, Henk and their team. Now, all the activity around VRPs is truly pioneering. And we've gathered some of those amazing pioneers with vision and foresight to discuss what we need to do to bring VRPs to life and how we can collaborate, that word again, to scale and to capture the opportunity. Now, VRPs are a topic that we are constantly asked about from our global community, whether that's our family here in Brazil or in Saudi, where we're just starting to write phase 2 of the standards. In fact, whilst researching the index, which we're launching soon, it was a topic that we were constantly asked about, and it was constantly mentioned by regulators and policymakers globally. So I am delighted to have this conversation, and I know that I'm going to be learning. So without further ado, let me introduce you to Hugh Davis, the co-founder of Ozone and our guest host for today. Now, Hugh is joining us from New York. Hugh, great for you to join us. You've got a fireside chat with Rafe and then a panel. So if you want to introduce your panel as and when you get there, you can jump straight into your fireside chat. What I would say, just before I do pass you the mic, is that we are getting a huge amount of questions, and they are all around and this is before anybody's actually heard what our panel have to say. So if we could cover them, they're around the commercial incentives for banks and the liability models, which I've just mentioned, and the time to adoption. If I can just give a shout out to the people, and they're all outside of the UK. So that's Dan, Theo, Juliana, and Rosanna. So Hugh, over to you. Have fun.
Thanks, Helen. And thank you very much for the invitation to be part of this today. It is a discussion that's very, very close to my heart. So just to introduce myself, I'm Hugh Davis. As Helen said, I'm one of the co-founders at Ozone API, and we're working around the world to help banks and financial institutions implement their open APIs so they can comply and go way beyond compliance and deliver APIs such as variable recurring payments and various other premium APIs. We're also working with a number of central banks and regulators around the world to help create the right conditions for open banking, and included within that, make sure the right capabilities are there and the right balanced incentives across the ecosystem. So really looking forward to this conversation today. And it's something been involved in for a very long time as well. So in previous life before Ozone API, I was helping to develop VRP at the OBIE, and kind of led through that first real production test through the FCA sandbox and developing the standards and the like. So this has been a long journey, and it's great to get to this point. The format, it's going to be a relatively short fireside chat with Raf from NatWest, who will introduce in a moment, and then we'll move into a panel discussion to start really getting into the weeds of VRP. What are the kind of use cases it's enabling, and all of those questions around the commercial model, the liability considerations. How do we get this to a point that really scales? But really delighted to be joined by Raf. Anyone who has been watching the industry news will have seen that NatWest are right at the forefront of driving not just VRP, but a broad range of really interesting kind of capabilities and functionality through the bank of APIs. But NatWest have been very active in really driving the VRP agenda. So Raf, delighted to have you join us. I wonder, maybe we can start the conversation just with a bit about the journey, because obviously there's been a long period where you've been implementing VRP, going through the managed rollout, supporting some of the first sweeping use cases. I wonder if you can give us just a quick overview of what's happened to date.
Yeah, sure. And by the way, thank you for having me here. And as you mentioned, I'm leading for NatWest the commercialization of VRP, which is a nice intellectual and operational challenge for me, because again, is a broad topic in which everyone has a lot of opinion in terms of what to do and how to do VRP. So digging into your question, I think I'm not going to add anything that is so controversial or different from what you will hear from other banks. So as you know, for us, sweeping is so we have been mandated to implement sweeping, and we have been active in that space from the early days. So from 2020, working with the regulator in terms of defining the standard, defining the requirements. So we have been part of those conversations, and then for sure. In 2021, we kick off the implementation of the sweeping capability, and last year was also important for us because for sure implementation went in parallel with all the governance activity we will need to do every time we are introducing a new capability, and for sure this year we just started. So we recently, a couple of months ago in September, we exited successfully the managed rollout, and I think we were probably the third bank exiting managed rollout. And in the first month of now that the sweeping is completely live, we can see that there are some interesting number volumes in terms of transactions. So we see that this proposition is starting to roll out. But I think the big opportunity with sweeping is yet to come, and I think probably by chance, but I think sweeping will be more and more relevant, especially considering the current market condition. So again, high cost of living, sweeping can be a nice tool to help customer on minimizing the cost of financial product, especially those customers more vulnerable, more likely to go on overdraft. And again, I think there is a social element that sweeping can play here. And for sure, there is another one in terms of helping customer, educating customer on taking the best financial decision, where again, in a scenario, in an environment now in which there is a higher cost of credit, it starts to make the difference of moving money from an account to another savings account to optimize. So I think I would summarize that, yes, we have done everything that we have to do because, again, rightly so, the regulator have indicated us what to do in terms of sweeping. But I think we have now a very powerful tool to be even more purpose-led for our customer.
Yeah, fantastic. And I think you're right. This couldn't be more timely with the cost of living crisis. So creating a really valuable tool to help all of the financial insight that open banking enables become financial action through being able to act on the insights is really important. I guess one of the things that's been most headline grabbing is the move beyond sweeping though. Yeah, you guys have been in the news a lot recently with announcements around partnerships with many of the PISPs and third parties to look at leveraging VRP beyond that sweeping mandate. I wonder if you could, again, just tell us a little bit around how that's going. What have been some of the challenges? Where are you up to in the process? Obviously, we'll get into the weeds of all of this in the panel discussion, but kind of a high-level walkthrough how that's been going would be really helpful.
Yeah, no, that's a good question, and I think echoing what Helen said, so I think that's probably the key topic that in the open banking arena we want to explore and we want to discuss. So the long and short is, for us, VRP, I'm talking about the commercial part of VRP, so non-sweeping, is an opportunity. And luckily enough, so we spotted this opportunity early days. Has been an easy journey for us to find an agreement within the bank? No, I mean, like every bank, so we have a lot of stakeholders, we have a lot of different objective and point of view to align. But I think what have been at the very, very center of our decision in terms of, yes, we will enter into the VRP market is pretty much the benefit and the customer benefit. So what we have tried to do is, and what we tend to do at NatWest is putting the customer always at the very center of our decision. So again, I'll try to bring into life what I mean is, I think for us is important to, so has been important to bring to life that, yes, customer might use established payment method, cards, direct debit, standing order, but those are not perfect payment methods. So those payment methods have some gaps in terms of the proposition. So I don't know, cards, direct debit, they might be open to fraud initiative, because again, you will need to share so you as a customer, you will need to share personal information. The other one is in terms of a journey. So yeah, every one of us purchase goods online using a credit card, but I mean, sometimes the journey is a little bit clunky because customers are asked to are provided with a unique PIN. So the point for us is VRP can be the product that can unlock and can solve all those gaps. And therefore, putting customer at the center has led us to say, this is the right thing to do. On top of that, I think the other two considerations we have been taking have been on an investment point of view. I think VRP is a non-regret decision. So the technological capability is the same as sweeping. So it doesn't require entering into the VRP market, doesn't require to spend more money in terms of implementation. So for us, it was just a matter of can we maximize the investment we are already doing on a regulatory point of view to start to have some potentially some return. And then I think the last one was thinking that for us VRP, so for us the VRP market, so we think VRP is going to happen. So it's more for us, it's more a participation choice. So how do we want to participate to this market, at what point in time? And therefore our call has always been, let's start with something. We can go live with something even if there is not a perfect liability model, but there are some sweet spot of use case that we can start to introduce now without having, still we are waiting for the regulator to provide us more information in terms of how to manage liability or to manage this. So those are pretty much the key driver for us.
That's really helpful, and I think that's set a lot of context for the next conversation we'll get into as well. Perhaps one last question before we bring in everyone else. I mean, this is, I guess this is the first at-scale API that is starting to be commercialized. What do you think this means for sort of open banking and how banks are leveraging open APIs more generally? Is this the first of an ever richer suite of capabilities that banks can start to expose that go way beyond compliance?
Yeah, and I will try to answer this question looking both at VRP, but also what is beyond VRP. And I think this will also nicely fit for what we said before in terms of NatWest and Bank of API, in which we have a suite of API product that can support, let's say, the digital economy. So answering on the VRP space, I think VRP is just a smart way to move money. And rightly so, for customer, payment is a commodity. If we think VRP as the first step to build a more seamless, one-click, almost zero-click payment experience, then I think then actually we are unlocking the opportunity. So we are doing something that is, we can create something that is value added, and therefore also in terms of commercialization discussion, it became easier to ask for whatever is the price, because again, we can provide some value. And linked to this one, so therefore what I'm trying to say is, if we look at VRP, yes, it's great, but if we can add on top of VRP all our data, all our customer data, how fantastic will be a journey in which a customer, I don't know, need to buy something online, and with an API call, we provide all the information of the customer, where the goods need to be shipped. And plus we are adding also VRP capability to allow the transaction to be finalized, to pay. And I think that's probably what we see above and beyond VRP, and more farther away, what I think for API in general is, in my opinion, API can be the tool that will unlock us to deliver embedded finance. So embedded finance for me means we will sell our financial product at point of customer need. So if a customer need, I don't know, a line of credit while they are on a card retailer website, we can sell we can offer our product there, and API is the tool that will allow us to enter into that space. So I think, in my opinion, that's the future. But yes, we are probably a few years away from there.
It's interesting. I 100% agree, by the way. I mean, most of the conversations we're having with banks around the world, it's not about how can I deliver compliant APIs. Of course, that's part of it where regulation exists. It's how can I deliver APIs with the right functionality that means I can get financial solutions in front of customers in the right place at the right time with the right context. So truly embedded finance. And I agree with that. I think it's a really exciting vision. What I want to do now though, so thanks, Raf. What I want to do now though is bring in the rest of the panel. And honestly, I don't think you could get a group of people that have had their sleeves more rolled up in this journey to deliver sort of commercially driven VRP use cases. So I'm delighted to have a fantastic sort of panel join myself and Raf for the rest of the discussion. So we have Charles from Token, we have Dan from Plaid, and Simak from Go Cardless. So guys, thank you for joining. What I'd suggest, rather than everyone do sort of formal intros, as we get into the questions, obviously, please feel free to talk a little bit more about kind of your roles and what you're doing in this space. But we'll perhaps have a conversation where we talk a bit about some of the use cases and the drivers for VRP, so where we are in the journey and some of the big knotty challenges the industry is working through around things like the commercial frameworks and kind of the liability models? How do we make this scale? And actually, where do we think this will go moving forward? But we'll perhaps start the logical place, which is the beginning. Charles, I wonder if you could, I know at Token, you guys did a really good survey recently, sort of exploring sort of variable recurring payments and attitudes to this. I wonder if you could maybe share a little bit of insight and your thoughts on kind of what this means and which are perhaps some of the key use cases that you're getting excited about at the moment.
Thanks, you. Yeah, so we do an annual survey. So perhaps let me actually just start with introducing Token. So Token is an open banking enabler. We provide the infrastructure to enable open banking payments as well as account information services. Really excited about the VRP development, both on the sweeping and a non-sweeping perspective. And we've been running a survey for the last 2 years on variable recurring payments, both from a sweeping and a non-sweeping perspective. There were some interesting differences between the results from 2021 and 2022. One was that initially there was a lot of interest into the direct debits into the direct debit use case in 2021. We see from the industry, and the participants in this survey is a cross-section of the industry. It's both banks, it's merchants, as well as, of course, open banking providers and enablers. And whereas we saw a lot of interest last year and a lot of indications that direct debit was seen as a very strong use case, we saw that a little bit less this year. More taking over by e-commerce-based payments, single-click payments. Rafa also referred a little bit to that, which we thought was very interesting. Perhaps one of the reasons for that is direct debit is a relatively low-cost form of payment. We see a lot of interest in open banking payments to reduce the cost of processing. So perhaps because the benefit is not as big, that there may be slightly lower interest in this particular use case. So in terms of the use cases that really stood out for non-sweeping services, very much on the wallet load. So you have a wallet, the wallet has reached a certain threshold. VRP enables you to do an automatic update and an automatic load of that wallet with a certain amount. E-commerce payments came very strongly out. So single click e-commerce payments, either with bank authentication or delegated authentication, came out as another very strong use case. And of course, recurring payments by itself. That's where typically card on file is used as an alternative instrument. The reasons for that, there were security and fraud concerns around the use of cards or card on file from that perspective. Cost, of course, was also an interesting indicator. And cost came back in a number of elements in the survey. So a number of participants really indicated that they, for example, wanted to see, coming to VRP as a whole, more industry collaboration around cost setting. So standard pricing structures, for example. A very big outcome of the survey was that I think it was 80% of the participants wanted to see more standardized contractual frameworks. Of course, there's a lot of discussion around this in the industry as part of the work in the strategic working groups. So yeah, that was in a nutshell some of the outcomes. So summary: lots of interest in e-commerce payments, and I think the last stat that was very interesting was that, particularly from the merchant community, about 64% highlighted that they will be prepared if the cost was equal or lower than card on file to move their card on file based transactions to variable recurring payments. So close to 2/3. That's I think a very significant contribution.
That's interesting, and this is definitely a topic we're going to come back to actually in a short while. How do we create the right incentives so that this scales. But no, really interesting to hear about some of the use cases that are getting the industry attention. And Simak, I think you guys also have done some work getting sort of end customers' perspectives around all of this. What do you think? What do you think is, well, what are people saying, and what are perhaps the drivers for why this could be a good alternative for customers in some use cases?
Yeah, thanks to you. Just before I go into that, I want to say, unfortunately, I got my sleeves down for this call, so not as rolled up as you might have indicated at the start of the call, but I'll roll them up now so we can kind of get into it in a bit more detail. So for those who don't know, so I'm Simak Rezazada. I lead product marketing at Go Cardless. We're a bank payments provider, been around for going on 11, 12 years now. And so, you know, I have kind of quite a wealth of experience in the overall kind of area of bank payments. And I spend a lot of my time, to your point there, Hugh, talking to, you know, merchants, but also talking to payers, because, you know, ultimately, there are lots of things that drive adoption, right? Lots of things that kind of people focus on to think about, okay, is this the right payment method to me? What do I need to think about? And actually, we developed a framework which I'm sure I'll touch on. I touch on in almost every conversation, called the eight dimensions of payments. And one of those dimensions is this idea of preference, right? What do payers actually prefer to pay with, and why do they have those preferences? And what you kind of see, and you know, speaking quite generically, not necessarily about VRP in particular, is that payers have different preferences for different use cases in different countries at different times of their stages of their lives, right? So, you know, really kind of, when we ask payers more generally, how do you like to pay for this type of service? You know, you might see 30% of payers in the UK go, right, we'd love to pay with our bank account. And in Germany, that might be 50% of payers say, I'd love to pay with my bank account. And in North America, that might look like 5 or 10% of payers say, I'd love to pay with my bank account. Whereas, you know, 40, 50% of people say, I'd love to pay with my credit card, right? So this idea of preference, I don't think is necessarily new to people, but you have different kind of preferences for payment methods depending on the use case. And by use case, I don't mean vertical, I don't mean industry. I mean, you know, is it a subscription? Is it a regular invoice? Is it an installment? Is it a one-off payment? You know, these sorts of use cases. So I think that the first thing to think about is, what is the use case, right? And that you'll see really quite large differences in people's preferences based on the use case. But then when you dig into not just kind of stated preference, but what do payers actually care about when they come to make a checkout choice, right? What stops them from switching to a new payment method? What forces them to make a new payment method or choose a new payment method? And you know, we start to see some really interesting things, right? That are actually much less connected to, oh, I like this payment method or that payment method, but more like the underlying things that people care about, right? So more than 2/3 of payers, you know, would abandon a checkout process if it was too complex, right? That kind of, I'm sure that's kind of obvious to everyone here, but I think we often forget that it's actually ease of use and convenience that people optimize for when they're at the point of purchase. Likewise, you know, 45% of payers would abandon a payment at checkout if they had to enter their payment details at that point of checkout, right? So anything that kind of just interrupts the flow, you know, implies that people don't want to do that, and anything that can kind of make things easier, i.e. not putting in a payment details, super interesting. I think the third one I thought was really interesting is that 67% of payers say that they would completely abandon a checkout if their preferred payment method wasn't even an option, right? Which kind of really does kind of point to the preference really does matter. And then I think finally, you know, we've talked a lot about convenience. We talked a bit about preference and complexity. The other obvious one is that almost 4/5 of payers said that they would not use a payment method if the appearance of security was lax. And so I think those things combined give us a really good idea of what it is that payers care about, right? Convenience, not having to kind of enter you know, more details than they absolutely need to. It's what they want to pay with, and there's at least the appearance of security, right? They don't want to look like they're making a poor mistake. I think what's also interesting is what you don't see in the top 4 or 5 reasons. Things like rewards, things like, I get, points for doing this, right? They don't appear in the top reasons for people making these choices. And whilst there are some generational differences, so you'll see, Gen Z, these are quite extreme kind of differences. You'll see rewards make up maybe 1 or 2% of the reason people would choose a payment method. Even in kind of slightly older generations, that expands to maybe 10 or 15%. So I think we kind of tend to have a fixed view of kind of how important some things are and kind of ignore the things that actually are more important. And I think that how this kind of ties to our conversation today with VRP is actually when you look under the hood and into the details, VRP addresses most, if not all, of those kind of top concerns that people really care about. And that's why I think that this is not just something that's beneficial for merchants. I think in the right use cases, it meets all the needs of payers as well.
That's really interesting. I mean, tell we're on an industry conversation where we're talking about the payment methods that people love to pay with. I think you're right. I mean, it's often less about whether it's about actually what's easy, make sure it works and be confident in it, and kind of fits with that buying experience. And as you say, I think the core construct of a secure, long-lived payment consent does address a lot of those. Dan, interested in kind of perspectives from Plaid. What does this mean for you guys? What are you seeing as the key use cases and opportunities that it's going to unlock? I mean, obviously, you guys are very close to the account-to-account payment space in the US as well with Venmo and things like that. What do you think this is going to mean in the UK?
Sure. I think a lot of my esteemed colleagues on the panel have said a little bit, but just a quick background for those that don't know. Plaid is an open banking network and payments platform. We power digital financial services. We integrate and we power over 7,000 different fintech applications in North America, Europe, and the UK, and we integrate with over 12,000 different financial institutions. So we've got a pretty big oversight in terms of what's happening in this space. What are the trends we're seeing in the UK? I think, as some of the colleagues have alluded to, it's quite early days in terms of actual practical things on the ground. I think the big trend that we're seeing leaning towards is around automation, and that can read out in lots of different sectors. So whether it's business financial management of automating business cards or top-ups, or it may be utilizing or thinking how to utilize the sweeping use case. Again, we're seeing interest in wealth tech, moving around excess funds into ISAs or investment accounts, and the same with savings as well, like automation and using that sweeping facility to move around to get the best possible option. And in this current environment, I think obviously that makes sense. Again, with lending and credit, a similar story in terms of around positive balances and moving them funds around. But I think the big story today is that sweeping is not just defined by me to me, it's also defined by use cases themselves. It sets out in the description of it, due to the original order, because of about competition in banking, some of the things, the type of use case it's actually qualified. So overdraft unbundling, loan repayment, credit cards, and sweeping into interest accounts, that's actually listed. So it is quite narrow in terms of what we can do today. If you will follow the rules, it's not just me to me. There's also a sub level below me to me that we've got to work in. So if you move beyond that, the interest is clearly in that commercial space, in that world beyond where we're suddenly going to go to managing active subscriptions, extending one-click payment to e-commerce platforms. As we've already discussed, and really pushing into that direct debit and card on file market. So I think that's the big game. That's the larger opportunity. That's the one that we're all working towards, because where we are with sweeping, although it is a real game changer and one of the most fundamental breakthroughs in open banking payments, it's only part of the story, and it's limited by the order and by what we've been set out so far. So looking to try and drive forward that next market is going to be super exciting in the UK.
Perfect, thanks, Dan. Right, so let's switch gears a little bit now. So I think what we've talked about there's a really interesting opportunity beyond that sweeping definition. There's a whole bunch of really interesting use cases, and VRP brings some characteristics that can get rid of a lot of those typical challenges around the payment experience. However, there's a whole load of knotty issues for the industry to work through to get this to a point that it really scales. This next section, let's make this a conversation. So if we need to bounce around and challenge each other, let's absolutely do this. Raf, I wanted to get your perspectives on something first. So I suspect you have been one of the busiest men in the industry this year, with pretty much every third party knocking on your door saying, we want to put an agreement in place to access and use your VRP APIs for commercial use cases. I guess sort of perspective. Is that true? And how's this starting to shape out? What are the key things you end up agreeing? Not necessarily the detail, but kind of the big blocks that need to be agreed before you kind of unlock the gates and allow the partnerships to start.
Yeah. First of all, unfortunately, governance is also another big beast in my day-to-day life. So it's not just having chats with the gentleman in this call, but I mean also the lovely conversation with the governance internal. So that make me very, very, very busy. Going to your main question, so what are should I say the key ingredients for us to be the first bank signing a commercial agreement? I think the point I want to make is yes, definitely we are facing some challenges because when innovation comes, there is a lot of uncertainty. So what is the liability model? How a good contract will look like? How do we manage dispute? All this kind of stuff. So for sure, unanswered question, and therefore those are complications. Those make our job more complex because we are not building something so we are not selling something which is established. So we need to try to find on the day-to-day the right answer. And the point I want trying to make is even if there are not all the answers available today, we have been able to sign a few deals, and we are looking to scaling up. So I think one message I would like to land, pretty much a personal message, is let's not use the excuse that this cannot go live because the regulator have not provided answer, because to me that's an excuse. There are opportunities. There are use cases in which we can start to go live, even if there is not a fully fledged liability. And again, if we look at use cases in a super simplistic way, in which is the customer paying upfront or after a good or service is delivered, that will define the likelihood of a use case to drive a risk of disputes. So the bigger the lag time between when I perform a payment and when a good is delivered, that will incrementally increase the probability of a dispute. Bringing to life, if I have to buy an airline ticket, if I have to buy an holiday, something that will be delivered in 6 months' time is far riskier, and therefore having a fully fledged liability and dispute process is essential. If I have to do a charity donation, I have to pay, I don't know, my utility bills, the risk of dispute is lower. So what I'm trying to say is in the market, there are opportunities to start to use VRP. Going to your question, which is what is needed, for sure. When I signed contract with Go Cardless, with Token and other few PISP, the contractual element is a big stuff to unlock. So I think for the first contract we signed, we have been working for 6 months. Now is a matter of few weeks, but again, having I think a framework that can tell us this is the contract that will facilitate, and within those contracts we also will we will suggest the rule in terms of dispute and liability that need to govern the relationship of the specific use case, of the specific deal that we are going to propose to market. So those are pretty much what usually we do. And for sure, pricing is also another element that we will discuss within our contract.
So, I mean, there's a lot there, right? And it sounds like it's been a long process working through these issues with all of the third parties that have been coming to talk to you. I'll perhaps flip it around. Charles, Simak, in whatever order, how was it for you?
So it was an interesting process from the perspective that what we're really trying to do is almost develop a set of rules for a new form of payment. It was interesting. Helen highlighted some of the questions that came through from the audience around liability models, etc. And I would like to run or to share a kind of analogy. You know, at the moment, the liability, there's a liability model in PSD2 from a fraud perspective. There's also a model for single immediate payments for commercial disputes. So in case there is a problem with a good or service. There's a lot of discussion in the industry about this model and should there be similar consumer protection across all payment methods? We don't believe that should be the case. Each payment instrument has different capabilities, different features, and different benefits. And this is not a card-based payment instrument, therefore the consumer protection should not be the same. And if you take the analogy from the Netherlands, where Ideal is the largest payment method, close to 70% of all e-commerce transactions are processed by Ideal. The model is the same. If there is the fraud liability is borne by the banks, and if there's a commercial dispute, this is basically to resolve between the consumer and the merchant. So your question was around the context. That was one of the aspects that was covered and discussed. You know, what is the liability model and what should that liability model be? I think that when a consumer buys something from a merchant, that is really a direct relationship between the merchant and the consumer. It is the merchant has a refund capability to enable the consumer to make the consumer whole in case there is an issue. Now, does that mean that this is the be all and end all? I think there is an opportunity to add some additional protection from consumers, but should we take it to the extreme of the way it is covered by cards? It's a different payment instrument, and we believe that this can be solved in a different manner. So those are some of the elements that were part of the contract, but overall it was a very healthy and healthy contractual relationship, and we're very proud of our partnership with NatWest to move this forward.
I mean, it does feel like there've been some really good partnerships forming through this. I mean, usually the first time is always the most difficult, and things get sort of faster and quicker and more replicable. Simek, I guess the idea of having similar conversations with every one of the banks, that's quite a heavy investment, right? I mean, it feels like it's a necessary part of the process here, but how's the process been?
I mean, I think the point probably, the thing I probably think on this is that whilst it might be a heavy process, whilst you're, trying to form something that's broadly new, right? Broadly kind of, everyone's kind of finding their feet. I think actually having multiple conversations, getting different opinions, kind of encouraging different challenges is actually quite a useful process, right? Like, I wouldn't even look at it as a high lift thing. I'd look at it as a high education opportunity, effectively, right? And I think what's also super interesting is that, whilst we come at this from maybe a slightly different perspective, having built a global direct debit network to begin with, and having had conversations with banks in different countries to kind of help set that up over the last kind of 10 years, and then having similar kind of open banking powered conversations with banks in different countries at the moment. It gives a lot of opportunity to say, okay, well, this is how this country is looking at the problem. This is how this bank is looking at the problem, which I think you could view in two ways, right? It either kind of helps you identify what some of the pitfalls are, but also helps you identify, well, actually there are novel ways that we can look at the problem that we hadn't considered before as well, right? And to name a few, not necessarily problems or things that we overcame, but you could look at kind of similar scenarios, let's say with Pay 2 in Australia, right? Like, how is that managed? What does that mean? Offering what is fundamentally quite a similar experience and a similar set of kind of use case and opportunities, but kind of being managed and set up in quite a different way, right? So you can start to see, okay, well, how do we think about the challenges that are presented there, and how do we overcome them there, and how do we overcome them here, and just share, right? And just share that information and discuss. So I think, yes, there's a lot of conversations to be had, but there's advantages to that, and I think we're happy to engage with it. And we've had many a productive conversation with our colleagues and NatWest in particular.
Yeah, I think it's a really important and interesting point, right? There's so many conversations going on at the minute that are accelerating and innovating the thinking about how do you make this work. It's kind of a spider's web of lots of conversations and education. At the same time, we've got initiatives to look at, do you create a European-wide framework agreement, and a number of us have been involved in many of the conversations in the UK around how do you get to this sort of framework agreement. My hypothesis is all of this work that's happening now, we're going to end up with something relatively quickly that is 80 or 90% of the way there, because a lot of those issues are being navigated by lots of companies in parallel. But Dan, we were talking a moment ago about the differences in use case and the level of risk, and potentially there's a logical order of starting with some use cases that are easier to solve for than others. Is that the way that you're thinking? And I guess on top of that, there was a question from the audience as well around the cost of living opportunity here. I know Raf talked about that earlier, but you talked about kind of helping platforms with money movement. So if you have a perspective on that as well.
I wanted to just jump in on the main conversation, the meat, if that's okay first.
Absolutely.
Talked about. If we want to make this successful in the UK, bilateral approaches are only going to go so far. I think that's key, and that's why we're having this discussion at the moment at the JROC, the Joint Regulatory Oversight Committee, where open banking is coming together to think about the post order and how this works. And so the big issues we're going to make from it successful is coverage is one. We don't have full coverage at the moment. Banks are not really incentivized to create the non-sweeping APIs available, even though they're there. Is the business case there for all banks? And so we're discussing, how do we get more coverage? What's the role of the future entity or regulators? So that's going to be key. We can have a great arrangement with a small number of banks, but you need coverage to make this viable. Yeah. So that's key. Then we've got the economic model. We put some ideas out there ourselves in our research. Maybe we won't want to touch in exactly what that is, but there has to be some intervention. This is a completely asymmetric market that we're talking about. And that's why bilateralism is going to be challenged going forward. So what that intervention is, there's lots of proposals. I know the Open Finance Association are putting forward, whether that is a price cap or regulated pricing, or whether it's more intervention from the government side to make this work. Because key for what open banking is about is competition in payments. And if we want to get this going again, we're going to have to think about it. We talked a lot about liability. What we really need here is a multilateral approach, some sort of thin rule book to look at this. Now we're moving beyond PSD2 to think about that. And again, this is something that I think the banks are aware of. It will reduce transaction costs if we get there, and obviously will helpful for the entire industry and provide certainty for consumers and businesses alike. But also key not to replicate the same consumer and payment protections we have now There's no need for chargebacks. We want to build for a push framework, not a pull framework. You know, you don't share your card details. There's lots of other safety precautions in and around open banking style payments. So I think, you know, these are all valid conversations, but we need to move beyond that if we want this to be a success. Open banking is a regulatory intervention to provide competition, and saying we're all, you know, working together, that's fine, but not everyone's working together. And I think at the future entity and Treasury and JROC, we need to intervene if we really want to make this a success.
Yeah, I think there's a really good point. I guess just to clarify, I guess the observation I was making was sitting around a table and debating tends to create some good conversations, but not a huge amount of progress. What I'm hopeful is the first few concrete moves will help get to that more common framework much more quickly than industry talking groups. I agree with you. I think this only becomes scalable though once you've got a kind of common framework, so, and it's accessible to all. And there was a question. There's a question from Mike Mann. It was pointed at Raf. I'm not sure this is a fair one to ask Raf though. It might be a fairer one to ask some of the other panelists. How long before the other big banks join in on this commercial VRP bandwagon? What do we think, without naming names?
Well, by the way, yeah, it's my friend Mike from Williams. I think that's probably a question better to be asked to our colleagues from Token, Plaid, and GoCardless, because again, you guys are the one that can speak one-on-one with other banks.
Exactly.
My guess is in 2023, hopefully we will see a couple of followers, because as Dan said, we need coverage. But I will leave the rest of the audience to advise.
I think we're in a period where everyone's waiting a little bit in terms of what's coming out in the next stage of open banking. We're trying to figure out, some are trying to move into that bilateral space and where's the model. But unless it works for everyone, it will be slower than many would like, and the consumer benefits will be slower than we would like. And I'm hopeful that the outcome of JROC, when they look into that, think, what are the policy outcomes we want to achieve from this? Do we want greater competition, more entrants, lowering costs? Then they will intervene in the right places, create common frameworks that are enforced by a future entity with teeth. Otherwise, you know, we will take a lot longer to get there. We're looking to Europe with the SPA proposal at the moment, which is something to try and share value between banks and TPPs and create a premium services above the PSD2 baseline. It's running into challenges again, because around that, well, who's going to enforce some of this beyond? It's a very noble approach, but again, is it the EPC or what's going to happen there? I think they're running into the boundaries of working together. To once we get to the final show, is like, is this going to work? What's the model? Now they come and say, well, who's going to enforce it? Which side do you want to come down on? What do we want to get? More competition, or do we want to work together and have a suboptimal outcome? So I think JROC needs to make a decision. Treasury needs to make a decision. Do we want open banking to go above and beyond and start to deliver for consumers? And that's when banks will be at the table, because they'll have no choice.
And I mean, I think realistically, it is going above and beyond the scope of the initial order in PSD2 right now. Anyway, that's why we're having this conversation. I guess the question is, what's the route to make that scalable and a fair market? Now, in the earlier conversation, Raf, you were talking about the different areas that we need to think through, the risk and liability, the commercial model, and how this all differs a little bit by use cases. Different use cases bring different levels of risk, different commercial environments. Do we think in the card world there's one pricing model? Do we think there should be one pricing model here, or the range of different use cases, does that drive very different approaches? I'm aware that's an incredibly open question, so yeah, please jump in if you have a strong view.
I will try to answer as per usual in a political way because it's pricing, and then I will also try to answer. Would like to add also something in terms of what you just discussed before we're done. I think the beauty of VRP is that mix all together different kind of use cases. So use cases that can be direct debit like, standing order like, card like. So I think we have, and I think when it comes to price, it's a serious topic, and we need to run a pricing with evidence, so not just with what I don't know, a few people are telling us. So I think yes, there is for sure an opportunity to differentiate by kind of use case, because risk should be a variable, because the specific industry of a customer should be a variable, because the size of the customer should be a variable. So I think with VRP, we can try to move away from the subsidizing approach that interchange has today, because today the customers that are less risky are paying more, and they're subsidizing those customers are more risky that are paying like the others. So I think that's a very difficult to unlock, but I think there is a way in terms of moving a little bit out from the simplicity of what we have today. That being said, then I'm answering. I'm answering the question you have not asked me, but I'm quite keen to answer. Yes, I agree. We need the regulators to do something. And I think, my opinion, if I have to do my Christmas list of what I would like from the regulator is liability model and dispute process. So I think those are the elephant in the room to me. But I think I'm a little bit worried to think that if we think in this room that the approach is we are waiting for the regulator to come with a long list of answers, because that might take years. So we are asking pretty much the regulator to solve a rebus that is more difficult than Brexit. So I think we need to start with something, and I think we have the opportunity to work with you guys, the PISP, that you know how to do perfect customer journey, with us bank that we know how to make profitable product and product that can be put the customer safe and secure. So I think if we can work together, and I'm sure we can finally find a perfect solution. If we leave all to the regulator, I think the solution will be probably suboptimal.
That's a really good kind of synopsis of some of the key issues there, and I know we're running towards the end. So you've actually inspired me for a final question for everyone, and I think you've answered it there, Raf. But to Dan, to Charles, to Simak, we are getting close to Christmas. Over and above what Raf has said, what is on your Christmas list for things that are needed to really unlock the potential of VRP? So perhaps Dan, if I come to you first.
Yeah, I think I said it in my monologue. Let's mandate coverage. Let's find a way of incentivizing coverage, or however we have to do that, because we need to make that quickly to benefit consumers. Let's think about the economic model. You talked about interchange. The reason, we'll look at the US where the interchange doesn't exist and the excess costs around that. The reason why it's there is because of the market, the duopoly. Again, this is an asymmetric market. What's that commercial model with 5 big players and a very small number of TPPs? We did some research that said we could potentially save up to £1.5 billion by capping it at 10 basis points for the issuer fee. I'll let you look at that in your own time. There are other options on the table. We're not ready to just this one, and the OFA have put a number of them forward around how we can make this economic, but we need an economic model, and it will involve some intervention. That's my Christmas list.
Fantastic, thank you. Simak, how about you?
I agree. I think I broadly agree with what Dan said, but I think if I could add 2 more, conversion, right? Experience. How are we making this a really neat experience for payers as they kind of go through the process, right? And I don't mean in an isolated way. I mean, how do payers have increasing confidence that the experience that they get when they make a payment is going to be consistent or at least broadly consistent across banks, across apps, across the different ways that they kind of experience the process, because that's the only way you can build confidence, and ultimately payers are going to decide at the end of the day, right? But to kind of Dan's point there, like the only way that you get that is if there are incentives to improve that, if there are incentives to do that. So yeah, fully agree that one follows the other. I think the second one on my Christmas list is probably, I'd love to see a hero use case, right? Something that's just something that everybody does. I think, again, like, let's get this in front of as many people as possible so that they can use it, experience it, and find something that everybody does that we could all go, yeah, you know what, let's push it there to begin with. Let's get payers used to it, and then move from there. That'd be a happy Christmas for me.
Fantastic, thank you. And Charles, the final word. What's on your Christmas list?
Yeah, it's the broad participation of the banks. You know, that makes it interesting for PSPs and merchants to adopt and to implement it. So very much in line with our previous speakers. And I think it's really realizing that this VRP is just a starting point to the monetization of an API economy that the banks, and I think it's a really exciting revenue opportunity, both for the banks as well as for, you know, third parties such as ourselves. So I think we're going towards a really exciting year, and let's really hope that the industry can collaborate to make this happen.
Fantastic, thank you. And I guess as I've got the mic, I'm going to take advantage as well. And actually, for me, I think it's everything that you guys have said. For me, I would love to see it start to genuinely scale in the UK now that these partnerships have started to form. And the reason for that, I mean, I spend so much of my time helping other banks around the world implement open banking and helping other regulators think through how to get this right. And taking some of the learnings around actually how do you create a framework so that this can be delivered in a commercially sustainable way that delivers all of the benefits we've talked about. I think it will be really powerful. The UK's got an opportunity to if move quickly, create a blueprint here. So that's my Christmas list, that all of the things that you guys talked about happens and we actually start to scale this. But I'd like to thank you all. That's been an amazing conversation. There's some real deep insight and expertise on this call. So thank you to each of you. And Helen, back to you to close out.
How on earth do I follow that? Thank you. And thank you to all of our panel. Not only do we get a lot of questions from the audience, we've got a lot of feedback. So Caroline from Bottom Line, I'll give you a bit of a shout out. Caroline says it was an extraordinary panel again. So and there's I mean, extraordinary, in-depth expertise. Those are just constant words that I've been reading. And Hugh, when you said at the beginning, everybody had got that expertise and rolled up their sleeves, I think just from the depth of that discussion, just incredible and brilliant that one of NatWest's customers that went live today tuned in as well. So maybe we will start to get that hero use case. We need really our HMRC moment, don't we? With, you know, the 7.9 billion of payments, but I'm sure that's not too far away. There's, you know, a community full of inspired entrepreneurs. So I think we'll get that use case. So all that remains really for me to say is a huge thank you. And we should do that again. I do have the opportunity to speak to the regulator very soon. So I will show them this panel session, and gentlemen, I will also list down your Christmas list, and she will have that. Helena will have that this evening, so she'll wake up tomorrow morning. So I would like to thank each and every one of you. I'd also like to thank my team. A huge amount of effort goes on behind the scenes to make this happen. So hats off to everybody. The team have met Kaylee, and there is other people that support Kaylee as well, but thank you very much, Kaylee. Job well done. We will be sharing this on social media, so please do share it far and wide. And our next campfire is with our Brazilian family on the 6th of December. And that's on financial inclusion. Interestingly, that we linked sweeping back to to the high cost of living. Be interesting to see what they say in Brazil about that, because VRPs is something that they're chattering about down there as well. So thank you very, very much, Hugh. Enjoy the rest of your day in New York. You've just jumped out of a workshop, so thank you for that. And all that remains for me to say, have an enjoyable rest of day. Take care, everybody, and thank you very much. Bye for now.